Today, we are going to build this super simple Donchian breakout strategy without using any code at all. This strategy was inspired from this website right here, which was published back in 2020, so you can have a read for yourself. The great thing about this strategy is that it is super simple and we're using some very, very basic concepts, which is a breakout of the Donchian channel. And the Donchian channel is some fancy words for pretty much breaking out over the highest high over an X number of bars, or breaking out past the lowest lower over an X amount of bars. So this is the long logic. We are going to enter a trade when the high breaks above the highest high, for example, of the past 20 bars. And for our exit, we're going to do the opposite, but reduce the period that we're looking at. So for when the low breaks below the lowest of the last 10 bars or so, we are going to use an ATR as a stop loss and an ATR as a trailing stop. And that's it. This is a very basic breakout strategy. For our short entry and exit, it is exactly the opposite of the long entries. So everywhere that you see a high, then we're going to replace it with the word low. So the low breaks out below the lowest of the low of the past 20 bars. And for our short exit, we're going to do the high breaks above the highest high of the past 10 bars. We're still going to keep it the same with the stop loss and trailing stop with an ATR multiplier. By the way, if you're already a profitable trader and are looking at making some extra money, then you might want to check out trading.com. They provide a system for profitable traders to become hedge fund traders. From as little as $1,000, you can trade a real $10,000 account and start the process to qualify yourself and proving yourself worthy of managing hedge fund capital. Unlike prop firms who want you to fail, trading.com is different. They want you to succeed. That's why they don't put in a million rules. There's just 2 rules. The max drawdown is 10% and the profit target is 20%. When you reach the profit target, you qualify for the next stage, pass all 5 stages, and that's where you could get access to hedge fund capital. So from $1,000, your total payouts just for the qualification process, if you add up all these numbers, would be $40,000. And then when you're trading hedge fund capital, who knows? Thanks trading.com for sponsoring this video, and the link will be at the bottom. I've got Strategy Quant X already loaded, and on the left hand side I've selected Algo Wizard, and let's create a brand new strategy. I'm going to give it the full editor and let's call this Donchian. In the Trading Signals tab, we've got 4 different sections, and today we're going to use all 4 sections. In the first one, you've got the long entry signal, and I'm going to set this to true, meaning it is always going to be valid. Same with the short exit. I want to set everything to true. The reason I've got this both to true is because I want to use a stop order to enter the market. So we're going to do that in the long and short entry tabs. Next, let's create our logic for the exit signal, and we're going to base it on the close, which is going to be less than the lowest. And instead of using the period of 14, we're going to create a brand new variable. Let's call this exit period. The reason I'm using a variable instead of a number, which was previously 14, is because I want to be able to optimize this number to find the best settings later on. So let's go ahead and duplicate this logic. And for our short entry signal, instead of less than, we're going to change it to greater than. And instead of lowest, we're going to change this to highest. Again, using the period exit period. Confirm. Let's move to our long entry tab, and here we have to delete this line, not short entry signal, because remember we set everything to true, and this won't be able to execute if we've got this logic in, so we're going to delete that. The other 2 are fine, and instead of entering at market, well, let's delete that because we want to enter at stop. For our entry point, we're going to use the highest of the past high bars. And for the period, let's again create a brand new variable that we can optimize later on. Let's call this entry period. Create, confirm. So we are going to enter at the highest price over the past X number of bars. And for every single bar that we enter on, we're going to replace the old order. We're going to turn on a stop loss and trailing stop, and we're going to use an ATR for both. For the period and the multiplier, let's create variables for those. So for the multiplier, let's call this stop loss multi. We'll be using that for both the trailing and stop loss. And for the ATR period, let's create a brand new variable, ATR period, and use that again for both the stop loss and the trailing stop. And this is all for the long entry. We have to repeat the exact same process for the short entry. I've already gone ahead and made all the modifications to the short entry, so you don't have to watch me clicking around. It is exactly the opposite of the long entry. So this is what the final screen looks like. And I did not make any modifications to the long exit or short exit. So let's quickly go back to the long entry so you can see at a bird's eye view what all the different settings are, and then back to the trading signals. And that is it. Before we jump in and start testing our strategy, it's important to do things right. And there are two things you should definitely not do. The first one is use all your data. So we don't go ahead and take all our data, and we don't go ahead and optimize all our parameters on all our data, because that is going to set you up for failure for over optimization, which is where your back tests look fantastic, but your live tests look horrible and you start losing money in real time. What I'm going to do is test it using a special technique called walk forward optimization. So here I've got a timeline from 2019 to 2025. Let's say I use this data for my walk forward optimization. What I'm going to do is I'm going to grab, for example, 2 years of data like 2019, 2020. I'm going to optimize my strategy and then find the best settings based on these 2 years of data only. And I'm going to take those settings and trade them live for 1 year, which gives me out of sample testing for 2021 period. And then I'll repeat these exact same steps using another year of data. So the next step is to do optimization from 2010 to, so that should bring 2020 to 2021, and then find the best settings and then trade them for 1 year. And I repeat that step every single year. And then at the end, what you do is you grab all these green bits, and that is your trading results. For my optimization, I'm going to choose 4 parameters only, because we don't want complex settings that have a million parameters. We do want to keep it simple. So for both our long and short entries, with the highest high or the lowest low, I'm going to optimize this number right here, which is currently set at 20. So I'm going to test 20, 22, 24, 30, see how it goes. And the same with our exit. This number, the lowest low, is smaller, but I'm still going to optimize it. I'm going to test 10, 11, 12. For our trailing stop and stop loss, I'm going to optimize both the ATR, which is usually set to a value of 14. I want to see what other values work here, and also the multiplier. So do I want to exit at 1 times ATR or 2 times ATR? So these are the 4 different parameters that I will be optimizing in the walk forward optimization technique. And for all my testing, I always include commissions and swaps, because if you exclude it, you are lying to yourself 75% of the time. The results after I performed walk forward optimization worked really well on pairs that tend to trend more, for example, gold and Japanese yen pairs. So here are the results on gold on the 1 hour time frame. The green dots you see here when you're making highest high in new equity. So you can see it's pretty okay. There are definitely periods like here where you've got about probably a year or so worth of stagnation, down here another year, and recently in 2025 this strategy has been working really well. But is this strategy really robust? And if you take a look at the next results, here we are trading exactly the same strategy. Now we are running on the 4-hour time frame, again still profitable, and on the M30 again still profitable. What about other forex pairs, like other trending pairs like Japanese yen? So this one is the pound Japanese yen 4-hour chart, and same exact strategy, not modified at all, on the US Japanese yen 4-hour chart. Now, what I didn't show in this video is the settings for the strategy, because the settings aren't going to be exactly the same for gold on the 30-minute, 1-hour, 4-hour, for the Japanese yen pairs that I showed you before. Each setting is going to be different for each currency pair for each time frame, and even then it changes because every year it's adapting to the brand new market conditions, and that is a process called walk forward optimization. So if you want to learn more about walk forward optimization, then watch that video right there. Thanks. Bye.